Hi traders, welcome back to the channel. So I don't know if it's this time of year or the increased vol or the news-driven markets, but I got a lot of questions about position sizing. How do you size your trades? Do you have a lot of trades all the same size or they differ? There's a lot of questions. I'm actually kind of excited about it because it's a topic that people didn't take seriously, and now it's suddenly getting a lot of questions on it. So who cares why? I mean, it's all good. It shows trader development, and as a community, that's always good to see. But the question I have is, what are the traditional ways of doing it? And, we see it all the time on YouTube and we promote it here as well. Maybe there's a different twist that we can add to the mix that will help you, and not only help you, pretty much guarantee you'll never blow an account again. All right, so I'm kind of digging this sort of conversation that we get in YouTube chats and comments, and even from our members about position size. And we got a couple of requests for our mastermind series with our members to talk more about it. That's great. I already have it on the slate for, I think, September now. So that's good to hear. But I want to basically take a step back and say, okay, how do we optimize this, but at the same time, not drive a trader crazy trying to figure out all these calculations? But more importantly, understand that if you don't have a strategy with edge, all right, it doesn't matter. Right? So it's really, really important that we have strategies in our arsenal that are going to produce a sort of positive alpha. All right. Over time, of course, you're going to have setbacks and things like that. We do get a lot of questions about strategy, and we want to have that. So I think that's the easy part. In fact, just click the link below. I'll give you my strategy that I use all the time, pretty much on a regular basis in any type of market. So just click that on, and it'll give you all the details, video tutorial, the whole bit, how that works. All right. If that's what you need. But if you already have those in your arsenal, right, now we want to take a deeper dive and say, how do we position size the best we can to optimize our chance for success? Let's take a deeper dive. All right, so what's that sort of traditional way that sort of the mass market uses, right? The infamous percentage of account. When you have that sort of set amount, and quite honestly, if you're doing really well and you want to increase size, I've used that methodology, and I've actually, taught that to our members and trading community for some time now. It's not a bad strategy, but can we do better? I think we can, right? Let's look at a different phase. Let's jump it up a notch and say, okay, what I'm going to do is I'm going to base my size on the quality of the setup. That sounds pretty cool. So if you have a setup, sort of an A+ setup, right? Let's use the grading system, as opposed to a, say, B or a C, which personally I question why you're even trading Bs and Cs, all right? But I'm a junkie, so I understand. You want to get in the game. Well, if it has a positive expectancy, I guess there's a validation to it, but why not stick to those high class, B+ minimums, A and A+. So you can adjust size based on that. It's actually a very popular strategy, and it actually works very effectively. The challenge that we have with this is, what is your formula for determining what's an A+ setup? All right. So I question some of the things where I'm going for it because it was like the best setup. Really? Okay, fine. What is your formula? So the first thing I want you to think about is, if you have an A+ setup, or you want to use the method where you add more size onto sort of higher quality positions, how do you define quality? So let's take this one step further. How we define that quality. Great. Setup's good. Confluence factors, all those things line up. Perfect. So what about your trading plan components, right? Does it meet your trading plan? Now, what's the difference? Well, your strategy is your strategy. You have your strategy components. But what about your sort of umbrella, your trading plan? One of my rules is I can't risk more than 25 points on the S&P mini futures. Okay. That's great. I'm going to accept this and that. Right. Has a potential for 70 points target on the S&P 500. Okay, great. But my stop has to be at 40. So what do? Do I move my stop to accommodate my trading plan risk? Well, that kills the sort of basis of the trade itself. So what I want you to do is factor in the components of quality. Say, does it meet not just my strategy components, but does it meet my trading plan components? And risk management, or risk position sizing, is very, very important. And what I see a lot of times is, well, we'll just move our stop closer to accommodate the trading plan. Well, no, that kills the whole basis of the trade. So what I want for number 2 is, you got your trade components, your strategy itself, check. Okay. Second, quality, and does it meet your definition within your trading plan guidelines? Okay, the question is, do you even have a trading plan? But that's a different story for a different day. But does it meet your trading plan rules? Let's go over one more example. So generally, I'm a big proponent of, if I see edge on my screen, I got to take it as a risk manager or as a trader, or even, an overseer of managed money. I mean, that's my job, to take advantage of edge. But I understand in trading plans, you may have certain things where, okay, I'm going to have a daily target. So I reach my daily target, or I'm going to have a weekly target, or I'm going to shift my strategies or components maybe towards later in the week. I do this a lot. If I'm having a good week on a Friday, I may sort of go for it with good risk reward, but I'm not going to sort of give up my week, or, I may lock in some gains. That's great. That's part of my trading plan, not my actual strategy. So if I have an A+ setup and I've reached my weekly goal, or I've reached a daily goal, do I take that? Well, the answer is no. So I have an A+ setup. You have the authority to, quote, increase size, but should you take that? Well, according to your trading plan, the answer is no. So what do you think about when you say quality setup? Are you even allowed to take the trade in the first place? All right, next, and this is really the key takeaway that I want to make in this video, is ask yourself this question, or let your trade journal answer for you. How well are you executing the strategy itself? So you may have a strategy that has a very high win rate, or maybe the back test has a high win rate, but how good can you actually execute it, right? What is your sort of compliance rate, your ability to execute? And not just, oh yeah, I do really well. It's, how do you identify the setup? Is it properly identified? Is it properly identified in certain market conditions? Can you execute the entry to perfection, or at least as per the strategy? How about the trade management? And how about your exit management? All these components that we can really define as trade execution, compliance, or accuracy should play a role in your position sizing. So give us an example. Say you have two strategies. Both have pretty good success rates, but the one, there's a lot going on. There's a lot of confluence factors. It may be during a news event, and it's tough to really manage it. All right. And your results show that maybe your compliance rate is a little low, right? Should you have that defined as an A+ setup? Well, the setup itself may be an A+ setup, but your ability to execute it may not be. Does that mean it's a factor in raising your size, or, increasing your size on that? I think it should be. So this is one of the key takeaways I want to make in this video, is how about your ability to execute it? That component, add that to the quality definition. All right, and lastly, I know probably a lot of people are going to hate me for this. I know my members do. All right, how about adding a market context element to it? So say, for example, I have certain strategies which, work pretty well, but they do much better on inside days than outside. Inside is when price overnight has been hovering inside yesterday's range, and it opens inside the range, and its first hour or so has got that sort of choppiness. It's pretty much digesting and all within an inside day of yesterday's range. To me, that allows me to focus on certain strategies that really take advantage of that, right? Well, if I have a strategy that's just really doing well, has positive expectancy and all that, checks all those previous boxes, but the market context element doesn't match. So here I am in a chop environment, but price is well above yesterday's highs. It's broke weekly highs, and it seems like a trend day. Is that an A+ setup, right? All the other components made sense, but my market context element, or at least this particular definition of market context, doesn't meet the grade. Here's another example. Say I have a particular trend-based strategy, and the strategy I mentioned earlier, you just click on the link below, just give that to you. This works really, really well in that first hour and a half of the New York Stock Exchange open. All right. First 15 minutes, a little crazy. After that, the next hour and 45 minutes up until the London close, that's the sweet spot. So shouldn't that be a factor in my A+ setup? It meets all the compliance components of the strategy itself, but that's the time when the trade excels the most. Shouldn't that be a factor in the quality decision, right? So I'm only going to increase size when it meets all my criteria, and that particular strategy is in the time of day a sweet spot. So my point here is try to think about and factor in an element of market context that will allow you, or at least raise the quality bar, which allows you to add size to your position. Think about that. All right. I know it's a lot going on here, and a lot of these factors as opposed to 1% in the trade. I get it. It's easy. It's simple, and you kind of can't make a mistake. All right. But raising this type of bar regards to quality will not only help you reach your goals, and your chances of blowing an account is basically zero. Why? Because if it's a low quality trade, or at least we're going to define this added elements of quality, it's more of like a higher criteria to raise size or define as an A plus setup. You're not going to have as many of them. So you're going to maybe go for it with higher size on those. But the ones that are not, you're either going to lower your size, or quite honestly, if it's like a B or below, why are you even taking it in the first place? That's something else you want to do. Go into your journal and mark your B setups or even B plus. It's like, like, how are these doing overall? Should I even bother be taking them? All right, maybe I'll expand my product scope and just take the A plus setups over a wider range of pairs or products or instruments, things like that. So I'm always taking A plus. Now the A plus becomes your standard size. So now you have almost like an A plus plus. All right. What you're doing is, it's not just about trying to get more gain. It's the risk management mindset. It's raising your standards so you're increasing the quality of your risk management on a portfolio level. So you'll find yourself taking very few trades where it's like B or below, or even B plus or below, redefining an A plus setup. And ultimately, that will lower your risk of ruin and lower your chance to basically zero of blowing an account. That's pretty cool. And I know it's a lot to digest, but I just want to throw it out there, something for you to think about. That's why I like doing these videos, just like throwing some stuff at the wall, and some that's going to stick for some of you. I know it's a lot. 1% of trade is so much easier to calculate. But as you're developing, I want to get you more to a professional level. And if you're going to be managing funds, whether it's in a prop firm or outside capital, this is some of the things that's going to be expected of you, or at least be able to articulate why you're adjusting size. And if you do that, you really impress the firm, really impress the risk manager, and quite honestly, really impress yourself. All right. I hope you got something a little out of this. I hope you enjoyed it. Again, click on the link. I'll send a little information on some of the strategies that I use that helps me get to that A plus setup and the criteria that I need to make it happen. All right. Thanks again, and have a good one. We'll see you next time.